Welcome back. You're watching Business Morning on Channels Television. Chukuma Anyao, Head of Research at GTI Securities, joins me now as we end the show to talk about how the market is reacting to what was contained in the 2017 budget proposal. Good morning to you, Chukuma.
Morning, Harriet. It's great to be here.
So bring us up to speed. How is the market reacting?
Well, the market seems to be a bit, I think the market is still trying to digest the news because the all-share index is currently down about 0.07%, which seems to indicate that a lot of people are still trying to process where the growth areas will be, the winners from the segments based on the budget allocation and all that. I think a lot of clarity is still being sought by investors, and people are still trying to, make a sense of where the budget will, or how the budget will impact the market.
But in times past, we've always seen that recurrent expenditure always had the largest chunk of fiscal spending for whatever year. But this year we see current expenditure at 2.24 trillion and non-debt recurrent expenditure at 2.9 trillion naira.
Well, for capital expenditure, that is usually where growth emanates from as far as the economy is concerned. If you see recurrent expenditure going higher, particularly for a developing country like Nigeria, it doesn't spell well. So for the fact that we're having an improvement in capital expenditure, the portion of the budget committed to capital expenditure, well, it's clearly indicative of the fact that the government is looking at growth, is looking at jump-starting the economy. And for the fact that we are also in a recession, makes it an imperative for us to focus hugely on infrastructure. So it's something that it's encouraging that we are looking at more portion of our budget committed to capital expenditure.
And then it's also very reassuring for some of those industrial goods listed on the Nigerian Stock Exchange, most of whom, of course, are very heavily into construction, working with the government, private sector. So we should see some improvement in how investors should be trading around those equities.
Absolutely. I agree with you. I think we've always pointed out that there are some trigger points in that would signify or that would be beneficiaries of a resurgent market, and the fact that we are looking at a stronger concentration on infrastructure and capital expenditure means that people like Dangote, Julius Berger, which are stocks that we've recommended for a bit now, Lafarge, will thrive. So yes, companies in the industrial goods, in the construction segments of the market will enjoy huge patronage from investors.
But for today, what are your expectations? Already you're saying that the market is facing south, but yesterday we saw it closing very firmly above 1%. 1.29% was what the market notched up by yesterday, largely on the back of gains recorded by oil and gas and some banking stocks. But who do you think today will be responsible, which sectors will be responsible for where we'll see the markets finishing off?
I think construction, industrial goods will play a key part in how the market will play for the remainder of the week. I also think that there is still a lot of bargain hunting opportunities in the banking space, which is also currently, I think, if you ask me, I think it's currently the only segment up from the last check. So yes, industrial goods, banking, and construction will largely push the market forward, Harriet.
Chukuma Anyao, Head of Research at GTI Securities, thank you so much for joining me on the program this morning and sharing your perspectives.
Thanks for having me, Harriet.